I think, as you say, if you're data dependent and you get data like we've had over the past 6 weeks, you've probably got to act. You mentioned the inflation print. In February, the Bank of England were forecasting 9.2% inflation by April. So 10.1 is a pretty big miss alongside those wage numbers. 25 seems, yeah, fairly well done. Doesn't mean it's going to be boring, though.
Yeah, no, well, it's never boring, Simon. Back in February, I interviewed the governor, and I got the sense then, remember, they dropped the forward guidance wording and they changed it, and I got the sense then that they were perhaps prepping the market psychologically for the end of the cycle or possibly a pause. But obviously since then we've had those hot inflation prints. When do you think they are going to end this hiking cycle?
I mean, I think we've probably got one more there, maybe two, if core inflation continues to surprise to the upside. We've just got to remember, though, that monetary policy works with those famous long and variable lags. Yeah. The rate rises that are enacted now, they're going to take a year plus to hit domestic inflation. So, yeah, we're probably at the point where it's prudent to wait and see a little bit, judge how much the tightening you've done is impacting the economy.
But what would be their decision-making determinant in terms of whether they go for another 25 basis point hike or whether they pause, knowing that monetary policy works with a lag? What are they waiting to see to go for that pause?
Well, they probably want to be pretty sure that some of the month-on-month prints in core inflation, which have been very strong, have started to come back down. I think that's one thing. Obviously, the labour market is the other key input. Normally, of course, they'd be relying on a forecast as well, and they'd be pointing to that. But at the moment, the forecast is so ridiculously low on inflation, they seem to be placing virtually no weight on it at all. And that, I think, makes the communication a bit more difficult.
Yeah, well, let's get back to the communication point. We had the chief UK economist, Hugh Pill, a few weeks ago make a bit of a blooper, I would say, because he's received so much flack for it. But he said on air, we need to all accept that we are going to be poorer. Essentially what the Bank of England are saying is that everyone has seen a real hit to their incomes. But again, the communication, the way at which they went about delivering that messaging caught people off guard, and it also was very controversial. Do you think the Bank of England have a communication problem here in terms of what they're trying to deliver to the economy?
Let's be blunt. I mean, I'm not the chief economist of the Bank of England, fortunately, but he's right. I mean, in aggregate, real terms, incomes are down. We're all talking about this real income squeeze, this cost of living crisis. And if the stuff that you import rises in price relative to the stuff that you export, of course, you're worse off as a nation in aggregate. But, you know, when you are in that position, you have to be sensitive to how people are going to react. Just it being, a truism makes life difficult. So yes, I mean, I'd like to see them focus a bit more on the forecast, get that a bit more credible, and then, yeah, maybe just be a little bit more sensitive with some of these remarks, even if ultimately they are true.